with the dollar picture, as I mentioned, it's pretty clear. And if we go to the how the dollar is set up from a weekly level, we can see that it broke the structure, closed above. We can ignore this fair value gap here. Uh, it's important, but it's not that important that it changes the whole structure or something like that. So the when this low was broken, so when we broke this low, it this high became when we broke this low, this high became the main structure, and we saw this broken out. It has not obviously closed above. It can do that and go higher and higher from recover here. Obviously, there is still resistance there. You can see the factors that are there. It can give the price a bit of noise, which is why we have to be a bit careful. But yeah, overall, the structure is turning kind of towards the bullish side, which I mentioned here as well. From a higher time frame point of view, from a daily point of view, you can see this the structure changing towards the upside, and there is a lot of room upside to explore there, blank room. So these are all displacement areas. So if we look at this area, this is a displacement area, and these are all unfilled like imbalances that the price can target. Yeah, but yeah, we are not getting we are getting ahead of ourselves. So we should not think about that, but more think about the trade plans that I mentioned on GBP here. The main thing here is the two trade plans that I have mentioned is from the 1.3350 areas to that area, and the scenario two is just a bit above that. Why this is? I will explain here. So this is the chart here, uh, and if we go there on GBP, sorry, 1 minute. So when this structure broke on the mid of March, that became the lower low, and that became the point of the high of the structure, and that's why the change of character on the bullish side would happen. But and that was the target, that long trade that we were planning on Bitcoin, that was here, but we did not see that come into play, and uh, that actually rejected. So now the price can continue downwards after being rejected there and failing there. But there are 2 points of displacement here. One is around here, which I'm mentioning, and one is again chasing that high area. So those both of those are important areas uh, that the price can actually reject from. So both of those scenarios we have to be open on. How can we do that is going to happen on the hourly. So on the hourly structure, if we look at the price action here, there are factors that are going into the price action. And if we look at it just a bit different manner uh, from this 1.33 area, 3350 area, the rejection there, and then the high area, the rejection there, reversal. So that's those are the two opportunities that we could do. So you can see the sorry, I think it might not be as clear. Let me create the box. So this is the displacement I'm talking about, and then the further higher, this is the area of displacement I'm talking about. So the rejection can happen from these highs, but the actual trade will be initiated here, and the rejection can happen from these highs, but the actual trade will be initiated below this point of control. You can see the highest amount of volume is there. That's a point of reference in this trade. So that would be a point of reference in this trade, the rejection, and the trade will be happening below. So all these scenarios on GBP remain open. Now, Euro is a bit clearer. Obviously, GBP, as you can see, is not as clear, but the Euro is a bit clearer. Uh, there are two scenarios that I have mentioned. It's very simple how we can go about it and how we can trade that. If we look at for example, the daily, we have broken below. So this is the low and this is the high. So if we chase the high, and then reject there, so this area, pull back and into rejection, failing to break and change character. That is a short trade, continue towards the downside from there, and then another short trade, which is the breakdown, another break of structure. So break of structures happen, and new imbalance will get formed here, just above it, and that will be the second trade. So those are the two trades on Euro that are there. It's a very simple structure. I think much simpler than GBP. Then we come to Australian dollar, which is a separate kind of plan. I think the picture, as you mentioned, this imbalance is not going to get filled. with the kind of price action the dollar is expected to have and how the war is actually going to affect the euro, etc., etc. I think the higher imbalance of 1.17 to 1.18 on the euro, just to mention, to clarify, that's not going to happen before we move on to AUD USD. So now going on to AUD USD, this is very clean. I think this area is a very kind of clean imbalance that is there. We have broken again. The structure has broken. This is lower low is being formed. We can see clear. Let's say if we draw fair value gaps, we are there. So price moves into that, rejects, and on the lower time frame, and then we move from lower from there. So that's pretty much it. It can, like, obviously just doesn't have to follow the daily one. It can obviously follow other structures as well. So that's why this area, it should not actually close above like, because this is the area, it should not actually close above this to keep in the structure. So anything below there, rejection, that's fine. So main area is this 0.77, 0.700. That's a psychological level as well. We have like trend lines there as well. If we look at that, trend line areas, channel, kind of channel there, and if we reject that, that's a pretty clean trade in my opinion. Obviously, but I'm expecting lower trade. I'm not expecting to go back there, so that's why I shared the lower trade here. Anyway, moving on, not spending too much time. I think it's a very clean kind of expectation. The stop loss being put above that. That's why wherever we can get rejections, it's more realistic plan. But the stop loss would be above the actual target. So now USD CHF is a separate kind of plan. With USD CHF and USD Mexican and all those, we are essentially chasing the price into a zone that the USD carries. So like higher. So that's why in this zone, if we come back, we long, we hold, and yeah, because we can see higher highs, and high lows, and we are expecting it to form another high low, and that's why we long and we leave it. It's a pretty simple plan. It's basically the same thing on USD CAD as well. So if we go to USD CAD, this is the same thing. If we are going there, this is the value area high of the month. If we pull back either this month or at the start of the next month, that's why we long and go on. The point of control is pretty low and not expecting to pull back here. But if it does, it continues the pullback, that's also a very good level to buy. You can see a lot of imbalance there. So if we see the actual break of structure where it happened, the change of character, so this is where it happens. So this is where it happened, around 1.3752. So any pullback below that, that's a very good trade in my opinion, and we can actually target that and move. So it's a very clean setup, I think, and we can target that. Now, USD Mexican as well, I shared. I think we are in a very strong downtrend for a long time on the daily, and it's just about changing the character. After, let's say, if we remove this, after we see this, this is the lower low, that was the higher high, that was the point, and that was the change of character that we needed. That happened exactly on Friday close. So that's pretty good overall. And now if we turn on the monthly value area, we can see the point, why the point of control was for March, and that's why if we pull back, that's a pretty good level. That's aligning with this, with respect to this as well. So we got 4-hour change of character as well. Higher highs, higher lows, and another high low here around 17.8, 17.9, and we are in. I think that's a pretty good opportunity dollar-wise as well. So obviously all these are in line with our expectation that the dollar is going to continue. We are not looking into doing anything USD JPY or JPY this week because obviously it has broken structure again to the top. This is a buying opportunity in my opinion, but one I would be, I'd say I'm willing to miss. So we should be willing to miss this because of the nature of the price action, because of the nature of the risk, because of the nature of the asset itself, because they can intervene at any time. We are at almost a high of close to the all-time highs, and yeah, this is pretty concerning. Unless we get a weekly close above that, break out and change character on the higher time frame, it's I think very difficult for us to actually long here. The trade is long, but I don't see a risk to reward here. On an intraday basis, something we can do uh, short term, even on hourly and 30-minute, I think is pointless unless we are confident, and the confidence will not come, in my view, unless we take the risk. So in that case, if we want to really trade it, I'd say we have to go for a bit of risk around these areas or around the point of control of previous areas, which is here. So 159.5 would be something that we may want to look at towards 160 as well. So, but yeah, I would not trade this. Obviously, the same thing as that on Euro JPY breakout failing and the structure not actually changing is something very concerning on GBP as well. So structure is not changing. I'm not willing to trade this and risk that amount without actually having the backing from the fundamental side, which is not there. They are very callous with the market at the moment. We don't know actually if the Bank of Japan will actually intervene on oil or intervene on yen, or they will let yen go because they will have to actually purchase oil and sell yen, and the yen just carries upwards. It's a pointless trade in my view that has no backing overall. Now it gets simpler with oil and other stuff. So if we are looking at the oil, it's pretty simple. From a weekly point of view, there is not much there. From daily point of view, we did not break the structure as yeah, I did not add the chart here. So we did not break the structure here uh, by closing above this. So we could not, but it's very bullish indeed. We can see here as well on the 4 hourly. This is like very bullish indeed, the price action. But with all that being said, I don't see how we can actually long this because it did not actually break the structure and all that. So the main structure here to long would be around this area. So that's why I marked. So this is relevant from previous area as well. So that's why a lot of support is there. If we turn on different aspects of the price action, let's say candlestick pattern, sorry. This is probably creating triple top here. If we look at the price action from a daily point of view, that's also I think, the thin gap that was created on the gap on Friday between this area. So that's what I'm looking for. So thin gap around 91, 92. Obviously, perfect level is not gettable always, but 93 areas plus minus is something that we can target. And when we got the confirmation, I think most probably on the 30-minute or 1 hour, if we get confirmations like this or something like this, any structure that happens around these areas, we can take. With all that being said, I shared a very stronger recommendation for longs from the 87 areas, 87, 88 areas, because that's, I think, a failed market structure break. So market needed to actually break this low here to change structure. It could not. It created a low here. So that obviously creates the order block here, a very stronger order block here. I think the market players will come here. And if we look at the fair value gap from previous as well, uh, sorry, not on the 30-minute. So it is just above that. If we wick like that here, and this gap on the market as well. So if we look at that as well, that's where a lot of orders are being blocked. So I think that's a pretty good opportunity if we get it again, and if we can get even 15-minute, even 30-minute confirmation around those areas, something like this, getting in and securing an entry is very vital in those areas. And however we can get those, that's fine. So, but yeah, it's important to get an entry there when we go there. Obviously, that needs a lot of pullback. The short plan, I have not shared because that's obviously very much against the fundamentals, but it does create a picture here from this areas for a potential short at the start of the week against all fundamental plays. If the market does come into a triple top structure, uh, triple top structure here, and sorry, here, it could be there. So that's something that is there. We have to see how it happens actually, but it's something that we should be open to. But I have not shared as a plan because I am not confident on this. But yeah, this is something that we can talk from an intraday point of view and get an entry and do something there. Now coming to gold, it's again very different picture on gold. Like I mentioned here, sorry, that area that I mentioned for trading again uh, from for the trading on the daily like on daily intraday basis that holds because that is an area of interest. So if we look at here, the 4420 area, this is a very interesting area, and the low that was created actually was 4404. So 4404 was the low that was created. If we look at the hourly basis, that was the low that was created there, and we can actually, if we can secure an entry there, even on the low size, that could be something very interesting. You can see the breakout structure that is happening here, but the market is actually rejecting uh, on a higher time frame basis. It's not being able to change the character. It does not change unless 4600 is broken, and this low stays intact, which is a possibility, I think, from a double bottom point of view. If we get that, that's a very good opportunity as well, in my opinion, for a double bottom to massive upside. So anything that we can get that in this area is very highly interesting. So when the price goes there, we should be active and should be trading to secure an entry rather than trade that. So entry is secured and layering it with more size and more size and more size, even 0.1, 0.1, 0.1, something like that, and securing all of those entries in these low areas can be very beneficial for the coming weeks and months on gold. Obviously, this gold plan plays against dollar a lot. So if the dollar does continue to rally and if we need to have a short plan, I think that will only come when this 4350 or 4375 actually is broken. So if that is broken, I'll share a new plan, but until that happens, I'm not sharing it because, yeah, I don't see gold continuing this path of falling against the dollar. In cases like this, in scenarios of global market like this, gold is supposed to rise with dollar. That has not happened this cycle. So I think we can see a comeback of that. That's why this opportunity has not been shared and added to this plan. Now on the indices and all the plannings on the indices side, I think it's very simple what we want to do. Uh, like I mentioned, on a monthly basis, if we look at the chart, it's right at this support. So that's why I'm expecting early bounce on the week. On a monthly basis, if this is a very interesting area, or even this area after some downside as well is a very interesting area, 43,700 to 42,700, which I mentioned, I think, on Dow. So all of this is mentioned clearly, what is happening and how every level is coming into play. More realistic pullbacks, more realistic short ideas. I'm not uh, adding into the long idea, but I have mentioned this as a potential 44,600 to 45,000. So we are at 45,000, but even if we pull back a little into those areas, like I mentioned, in these noise zones, so not expecting that high lows, but in this area, anything in this area, if we do pull back into, uh, that is an interesting kind of long that is going to happen, but we don't have to execute based on like this higher time frame and a lot of risk that is not needed. We just need to follow the system and it will show us. It will show us where to short, where to long. Obviously, when the market comes on, the VWAP will restructure, the new VWAP will restructure, and it will not be as bearish. It will turn bullish. But on the bearish plan, if we look at the price action from that point of view, we can already see how it is respecting our plans. We can see this is the short zone already. So we are at this value area low. So this is 45,700. That's short area. This value area high from yesterday. This is 46,200. That's a short area, and that's what is mentioned. So 45,750, 45,700, and 46,000 is 46,000. So it's clearly aligning with the plans. And 46,500 and 46,750 is high conviction short, and I'll show why that. If we remove that, if we remove all the indicators, we go here. This is a separate kind of plan. So because of this close and the breakdown here, this fair value gap and this high becomes a high value imbalance that is there, 46,700. This area becomes an imbalance. Obviously, some of it is filled, so the price might actually not go there, but for this lower areas it can test, and it can form a structure of a sudden pullback into the zone and then fall. Uh, this is very aggressive case of the market continuing into bear markets, into like really negative areas of interest for these assets, etc., etc. But it's very interesting as well. So now those are the scenarios for US 30. Now for the same thing, exactly the same thing is happening on the Nasdaq, and that's the imbalance that we see for 24,000, and that's what is mentioned here. 24,000 short, 23,700, 24,000, and long around 21,500 to 2200. We are at 23,000, but the high that we see here is not for quite a bit. So if we go into that area, that is a potential area of long interest that could come into the market. Again, we don't need to follow that. We don't need to do that. We just need to follow this, and it will align. Like we see, this is, if we look at the Nasdaq, the value area high is at 23,800, 24,000. It's fine. If we print when these new levels will get printed, it will adjust and we'll get our levels through the system, and we'll get our trades through this and through the system. We don't need to trade anything beyond that. So yeah, that concludes this. Now crypto is very simple. It's not any kind of complicated picture on crypto. If we go to the Bitcoin chart, we can see where the imbalances are on weekly basis. You can see this was rejected. So the most important level where it is, this is here. That imbalance was done. So this imbalance is likely done. So that's why I think it is mentioned that we are likely not going there. So this is there. This is ideal. It's not the most valid. So this is ideal scenario. I don't think we could get that. But the realistic execution, more likely scenario, what could happen is the market could actually tap into the next likely imbalance that's there, which is around here, 73,500. Obviously, that was tapped into somewhat here as well. So that's why I have lowered it a bit, around 70,000, 70,500. If we get into that, if we get into that area, that's the imbalance that we can tap and that we can short. And also, we have to open that we might not get that. We might not get these conditions, 72,000 close, all those things, etc., etc. Alternate plan has to be there as well. An alternate plan is there if we just do continue selling off. The first thing, first here that is needed is a close beyond this low. When this low is closed beyond, that's where we become active, and that's where we get, and we then tap into these imbalances that are there left. So you can see this. So if we can see that these imbalances are not yet filled. So that area is not filled. So that area gap is there. So that's the resistance there for taking. So when that breaks down, it will go there and take and go lower. So that's the plan on Bitcoin. So yeah, it will create new imbalance zones as well. And as mentioned here, long side, no plans, nothing. Any longs that will be similar to the other ones that are shared, TON and all those things, we don't really want to do, and we'll not feel confident in these market conditions. So why talk about that? We should talk about the more like conclusive scenarios and like the things that we can actually trade. Obviously, we can see the 2200 as a valid 4-hour weekly level, but 2150 is a valid daily level. That's the imbalance that is there. This is filled. This imbalance was tested, but this is filled. This is still not tested. And if we go there, we short. That's clearly the plan on Ethereum. Solana, same. If we go there to the unfilled imbalance, unfilled imbalance is 88, 89, 90. The 93, 92 was filled, but this is not. If we go there, we short. Simple. Now, on BNB, the same thing. Where is the unfilled imbalance? On the weekly, if you see, the weekly one was filled. It was not filled to the brink. So there was a lot of imbalance to be filled, but it did not go there. But kind of did what it wanted to do, but the daily one is there, which is here. It was not tested, it was not broken. So 660 areas, 50 areas, whatever, alignment with BTC, we short. That's the plan. That's the whole plan. I think it doesn't need to be more complicated than this. So all of this also plays within the bit like dollar point of view and all that, what is happening in the market, all those things. But yeah, what we need is the price actually to throw us the break and like break down. We don't. We obviously have these daily supports as well, fair value gaps, but in these market conditions, they might not hold as much value as we think. Obviously, if we get a confirmation like this, that could change the stance of that we have. But until that we get that, I don't see how we can be bullish on this price action. So that's why no plan on the bullish scenarios as for now. If we do see a change, that we will update on the next weekly plan and next daily plan as well on each of the days that we'll do. So that's about it. All of it. Thank you.